How's it going, everyone? This video is going to be about selecting important liquidity levels and why it is important to understand where they are located. Now, if you haven't seen my latest video on kill zones, make sure to check that out as it will be important to understand for this video. We're first going to discuss the three things in which a candlestick can do. Then we'll talk about previous month's high and low, previous week's high and low, previous day high and low, and then we will talk about sessions and the liquidity that is formed during each session and how it can be used throughout the day. There are three ways a candlestick can form, and if you know the strat, you have heard of this. Now, the first way is a consolidation, and that means that this candle here could not take out the previous candle's high or buy side liquidity, or the previous candle's low or sell side liquidity. By definition, price is just consolidating here. Now, the next thing price can do is take out one side of the range. For example, here, price takes out buy side liquidity, but does not reach for sell side liquidity. Similarly, over here, price takes out sell side liquidity, but does not take out buy side liquidity. So this is a one-sided or directional move. The last thing price can do is take out both sides of the range, or buy side and sell side liquidity. So for example, here, price took out buy side and sell side liquidity. So if price is not in a consolidation, I can anticipate price moving towards the previous candle's high or low, or in some cases both. And this is why it is important to know where these levels are located on multiple different time frames. But first we are going to look at previous month's high and low. As shown in the previous slide, unless we are in a consolidation, we are looking for price to reach for one or both sides of the range. So you can see here on the first diagram, price reaches to previous month's low. Here a reversal was created, and then price reaches back into the range. Here, price just goes and reaches for previous month's high. So you can see these levels are used to frame a draw on liquidity or a reversal. So let's go take a look at this on a chart. So here we are on gold daily chart, and I have marked out our monthly high and low with a solid line and then extended that into the next month. So we have our previous month's high and low marked out with a dotted line. So you can see here in this month here, price reaches for the previous month's low before going lower. Then price reaches for the previous month's high before reversing. Then reaching for previous month's low, reaching for previous month's low once again, and then previous month's low again. So you can see price draws towards these areas and or uses them to frame a reversal. Now getting back into the PDF, you can see the same concept applies on the weekly time frame as well. Here you can see a reversal was framed off of previous week's low, and then we end up going to previous week's high, while down here, previous week's low is used as a draw on liquidity before price moves lower. So here we are on the weekly time frame, and similar to the monthly, as the same concepts apply, I would be looking for previous week's high or low. So let's see what happens. Here we reach below previous week's low and then close lower. So I can anticipate price reaching for previous week's low or previous week's high. Here, since we are trending down, I think previous week's low is more likely. Here we hit previous week's low, fail to displace or close out the range. So then I would anticipate price reaching for previous week's high. And there we reach previous week's high. Not a lot of displacement or direction. So here, kind of an indecision candle. So it could reach for previous week's high or low. Here we displace out and close. So is price more likely to reach for previous week's low or previous week's high? Probably previous week's high. Here we displace out, close back in, and if you notice, we did reach over into this fair value gap here. So with that in mind, I'd want to see price reach for previous week's low, but we'll also mark out previous week's high. And there you go. We hit our previous week's low, we close back in. Once again, similar to the indecision candle over here, could reach for either side of this range here. There we get some displacement down, still closing right at previous week's low. So we can mark both these out and see what happens. And price reaches for previous week's low. So the point of going through price action like this is showing that on a weekly time frame here, unless price is going to consolidate, it is likely to reach for a high or a low. So this can be used to frame a draw on liquidity or frame a reversal, and why it is important to have it marked on the chart. And as you could probably expect, the same concepts apply here on the daily chart. As you can see, previous day low framing a reversal, as well as being used as a draw on liquidity. Now we won't go through as many examples here as that is what my daily bias video covered, but let's walk through a few right here. So marking out previous day high and low, is price more likely to draw to this low or this high? Likely to reach for this low. So there price reaches for the low. Once again, is price more likely to draw to this high or this low? Probably the low. Here we close back in, so price could reach for this high, but it is a very small doji candle, so could reach for either side. I'm not really certain. Here we reach for both sides, put in an outside bar. Here I'd like to see a continuation higher to previous day high. Here we just missed previous day high, so we'll go ahead and mark out our previous day high and low. There we take previous day low. Let's see what happens here. And we take previous day low again. And previous day low again. So you can see previous day highs and lows can be used as a very simple draw on liquidity or used to frame a reversal. Now before we talk about the session liquidity, it's important to understand when these sessions or kill zones are. In this video, we'll be focusing on the indices kill zones and the Asia, London, and New York AM session. Now if you've missed my video on the kill zones, I'll go ahead and link that in the top right. But we're going to be focusing on Asia, which is 20 to 0, London, which is 2 to 5, and the New York AM session from 8:30 to 11. And similarly to our previous sections in this video, these session highs and lows can be used as a draw on liquidity as well as to frame a reversal. Now a lot of this gets into the daily profile, but we'll be keeping that for a later video series. So let's hop into the charts and go over a few examples of this. So in this example, I'm going to be using TFO's ICT kill zones and pivots indicator, and these are the settings I have for them. I have selected Asia, London, and New York AM with the times listed, and then I have my pivots marked off with no text to keep it clean. What I'm going to focus on is the displacement or lack of displacement out and around these areas. So as we let this move forward, you can see the script rewriting the highs and lows. And here the Asian range has formed. So now we will be watching this high and this low. So right here, we're failing to displace out of this area. So ideally, this makes me look to the other side of the range. No real displacement down here yet, we're just consolidating. So here we get a sweep of this high. So if this high is going to hold, then I'd want to see price displace below the Asia low. And there we go, we get displacement below the Asia low. The next thing I'm going to do is project out this manipulation from London. So I know that the low was put in here and then a high here. So I will project it from here to here. We have some lows resting over here, but I'm just going to focus on this 2 to 2.5 and this 4 to 4.5 area here. So ideally coming into New York, I'd want to see a continuation lower. So here we get a retracement. There is some displacement up here, so ideally I'd want to see price displace back through this area here. So we displace through it there, and you can see how it is using it as an inversion level. So from here I'd want to see price continue lower now that we started the New York AM session. Here's displacement down and through our levels here. So you can see how the lack of displacement over Asia high and then displacement below Asia low is what gave indication for what follows in the New York AM session. So in this last example here, we are going to take a look at NASDAQ on the monthly chart and then work our way top down to an entry. So if you notice here, NASDAQ retched into a monthly fair value gap and closed, respecting the consequent encroachment of this fair value gap. So if we are expecting price to go lower, where can we anticipate it reaching for? Previous month's low. So with marking that out, let's drop down to the daily chart. So here we are down on the daily chart. If you look at ES over the same period, you will notice there is an SMT right here. meaning that NASDAQ made a lower high while ES made a higher high, showing a crack in the correlation. So with this idea in mind, if we're looking for price to draw to previous month's low or this low here, we want to see some sort of shift on the daily time frame. So let's wait for that to play out. So here we get displacement down, a close below these up close candles. So ideally I want to see price reach back up, retrace before going lower. So here we reach up into this area and then reach lower. So using the next day model, I can look for price to reach where? Previous day low. So now let's drop down to the lower time frames and look at how the session liquidity plays into this. So here we have previous day low marked out, and that will be our draw on liquidity. So let's see how these sessions play out. So right here, our Asian range has been completed. So let's see if we get any displacement or lack of displacement over that. So right here, we are getting a little bit of displacement out. Let's see what happens next. Not a whole lot. Now we displace back through the range. I'm not really interested until the New York session, so I'm just observing. So what do I notice here? We had equal lows. We took that out as well as Asia low. So likely to come back into the range here. So here we start our New York AM session. Our draw on liquidity is still this low. So ideally we're looking for a stop run and displacement lower to get short and target this low. So here we sweep our London high and get displacement lower. So with that, I want to track an OTE of this range. So let's see how this plays out. Looking for an OTE of this range, I want to be tagged in here, my stop on this high, and then looking for previous day low. And there we go. We hit previous day low before getting a reaction out. So there you can see how we went from the monthly to the daily to the lower time frames, aligning them all and getting a draw on liquidity. We then use the sessions to organize an entry and target our draw on liquidity. I hope you found this video helpful. If you did, please consider liking and subscribing, and I'll see you guys next week.